large-scale multi-million pound raises.
Amazing. And Alexander, he's one of the good ones, ladies, one of the good ones, a real ally.
Thank you, Tara. Hi, everyone. My name's Alexander McLeod. I'm from Minerva Business Angel Network. I've been with the network for a couple of months now, previously running startup programs in the University of Warwick. And before that, as you can hear, I'm not British. I was doing all of the same work in South Africa.
Amazing.
Good to meet you.
And Roxanne.
Hi everybody, I am Roxanne Goodman. I founded and created Female Founder Finance with the aim of highlighting access to finance for female entrepreneurs. It's a complete female ecosystem, so it's connecting female-led businesses up with women within the finance industry to try and remove any aspects of the conscious or unconscious gender bias that we all know is out there.
Beautiful. And finally, Enye.
Hi everyone, my name is Anya, pronounced like Kanye, just to make things easy for you guys. I'm the founder of Beam. Beam is a really fun sun care brand that's easy to reapply. And we focus on psychodermatology, which is kind of the connection between your mental health and your skin. So we make stress relieving sun protection that's easy to reapply. I'm currently raising funding through my Kickstarter at the moment. So I think we have like 12 days to go, and it's been really exciting. I've also managed to get the CEO of Kickstarter to back our campaign. So it's been a really fun and crazy road. But yeah, that's it from me.
Amazing. And thank you to all of you as well for giving it the time today. So Charlotte, if I could hand over to you to kind of run us through the presentation, that would be absolutely wonderful.
Perfect. Right. Do I have control? Just quickly check in, Tara, or are you going to do it? Fine. No worries. No worries. Right. So just just recapping, just kind of going backwards. I'm not sure, obviously, everybody's geographical location, and it would take far too long to go around the room and ask everybody. But for those of you that are in the West Midlands, you will have heard of West Midlands Combined Authority. And Business Growth West Midlands has been set up as part of the Combined Authority, which is the business support unit. So this is, so you would come to Business Growth West Midlands, whatever area you're in within the West Midlands, if you needed any area of business support. So that can cover access to finance, which is what we're all here to talk about today, but it will also cover different areas such as exporting, sales, marketing, intellectual property, anything that it is that you need from pre-start to startup to establish business that is support for your business to grow. So just a bit of background of kind of where I sit. So if we can move on. We are a fully funded service, so we are government led. So there's no cost to access the business support within Business Growth West Midlands. We are completely and impartial, independent, and we work with all of the experts that you're going to hear from today. If we feel that you need the right referral into debt or to equity, that's kind of where we come in. We're independent and impartial, and we're all about helping you as businesses grow. So next slide, please. So the types of money we're going to cover at a really kind of basic overall level today. So we're going to go through grants, debt, equity, and crowdfunding, and that's where your experts at the top of the screen. These have all been brought in to talk to you about their particular expert fields within this. But I just want to kind of run through a bit of baseline level kind of knowledge about the difference in these, because I think there is so much confusion within the landscape and within the terminology, especially when we're kind of daily getting on with our businesses. There is a lot of confusion with this, so we just want to make sure everybody's got a bit of understanding. As I'm going through some of these slides, please do kind of write some questions down or write some pointers down, because when it comes then to hearing from the experts in each of these topics, you'll be able to really ask them their opinions and their kind of their thoughts on the questions that you do have. So let's kick it off then. Let's go grants. So this is always everybody kind of loves this slide, and I think it's a pressing topic if you're all in that WhatsApp WhatsApp conversation at the moment with Tara. When people talk about grants, people think, well, they either think two things. They either think free money, awesome, let's go for it, or you'll think a grant is a competition. Now, within the business support landscape, grants are used for different terminology. So let's kind of discuss the Innovate grant debacle, because that's still quite hot news at the moment. Innovate UK have some amazing grants, they do. But what we tend to find their system is, it is more of a competition. When we talk about grants at local level, so your local council will issue grants. They aren't competition based at all. So they're not on a scale where you have to get 97% or anything. That is more of an application form. So already we're starting to see we have two different types of grants, even though they're both called the same thing. And that really doesn't help with the confusion. And we completely get that at government. I just don't really know the solution to that. So it's just always worth bearing in mind, if you see something that says grant, just look into actually what does that mean, first of all? Is it something that I can just apply for with the support of somebody like myself or somebody else? Or is it a competition that actually is going to be costly to my business and my time? And actually, which one do I want to go for? So that's before we even look to apply them. So I just thought it was worth kind of addressing that bit of an elephant. With all grants, they do have criteria around them. And the reason for this is because if the government is going to give you an element of free money, a lot of the time it's matched. So it's not 100% of the grant is free. It's normally, say, for example, 50% match fund. And that means if you wanted to apply for £4,000, you would match £4,000. That's the 50% match. Now, obviously, the government have a criteria around this because they are essentially just giving you money to a degree. Sometimes these criteria can be job growth. So an example would be here is if you are going to apply for £4,000 from your local council, we want you on the back of this to create 2 full-time jobs, because that really helps their local economy. It helps people out of unemployment. And that is the criteria that surrounds this particular grant. It might be a different criteria whereby it means you can apply for money, but you have to spend that money on a certain category of equipment, or it might be that it's solar panels. Or as an example, you can kind of feel where I'm going with this. Grants do have criteria. What we always say to business owners is, if that criteria matches your current growth plan, awesome, go for it. But don't try and get a grant to match something that isn't in your growth plan just because it's money that's there for the sake of it. Because grants could put you in a dangerous financial situation if you're just looking to buy a new printer, for example, because you thought you were going to get 50% off. You're still having to spend that money, and that might not be actually financially viable or sensible for you to do. Just like taking on 2 new employees, that might not be the right thing for you to do within the next 12 months. So don't necessarily see grants as lovely shiny carrots, because it has to work for you as a business and be sensible. So as you can see, I'm kind of going pro, con, because there are pros and cons to all of these here. A massive pro is they're non-repayable funds. So there's no interest on these. There's no giving away any percentage of your business. It really can be money that can serve a project that can help you grow. It can help you tap into a new market. It can help you buy that new piece of machinery that you've been wanting to invest in. And it can really encourage innovation within your business, especially if you've got a team that you've wanted to do an exciting project with and you just haven't had that spare bit of cash. So they can be absolutely fruitful for your business. Just make sure you have a conversation with somebody at the beginning, whoever's involved within that grant, just to find out what the maybe the negatives could be and what that real true criteria is. Whenever you're filling out a grant application form as well, do seek support with whoever that provider is. I always say to people, send me your application form if it's some, one of the grants that I'm involved in, to view first, because it may be that I can come back to you with a tiny bit of feedback and say to you, add a couple of these buzzwords, and they might make all the difference with this grant application. So don't feel like you have to do these grant applications yourselves. There are people out there like me who are fully funded by government that are there to support you, because we want you to get that grant, because ideally we know it's going to help you grow your business. So yes, please do reach out. Okay, next slide. These are some of the live grants that I know for definite are live in Birmingham and Solihull. For those of you who are out of the region, some of these are applicable within the West Midlands. I couldn't comment outside of the West Midlands because I'm unsure of what different local authorities have got going on. But for those of you within the West Midlands, there are still some funds that will allow you to do a 50% match funded grant. This is the top one, the UK SME Capital Grant, 50% match funded. So this will allow you to purchase any capital. So this could be anything from a piece of machinery, like I don't know why I've got the word printer in my head today, but I have. It could also be a new website, because that is an asset, that's capital that you can own, and the government will help you 50% match fund that. Now, depending on the local authorities, so we've got Walsall, Wolverhampton, Dudley, Sandwell, depending on some of these grants may be at capacity, but there is still funding within the West Midlands. So if you are a business currently sat in Walsall and you want to know more about that, please let me and Tara know, because we can make sure that you speak to that relevant person within that relevant area. The international trade grant, that is one that is definitely live in Birmingham and Solihull. So this is 100% funded, which is why it's a smaller value. It's up to £6,000, so you don't have to match anything. And the idea is that it's designed to either help you start to work overseas, or encourage and improve what you're currently doing overseas. So as an example, if you have it doesn't have to be product based. If you are a service or a product based business and you are thinking of starting to work with some hotels in France and Germany or Spain, but it isn't something that's live on your kind of, the next 12 months because of cost, this could be a project where you think, well, actually, what if I look to spend some money on getting my website, the language changed, or I've got an option to put, different currency. This could be a pot of money that you tap into to get those changes implemented. It's a low risk for you because that money is there, but the idea is that's going to encourage you to start gaining international customers, international suppliers. So it's a real project-based grant on how it is that you can start to explore that international growth. Net zero grant. So this is all around sustainability. Let's get green, net zero, carbon emissions. If you have premises and, for example, wanted solar panels, this is absolutely the grant pot that you want to tap into. Not only is it the big solar panels, which is the obvious one, if you wanted to just change your lighting to LED lighting, or you wanted to purchase some fancy recycling bins, or anything that is going to help you reduce those carbon emissions, become more green, that requires you to spend some money, that's the grant pot that you want to be able to tap into. And again, that's 50% match funded. Next one, please. Debt. Oh, that word has such like it. We should put a little like dark cloud, I think, on one of these slides, because everybody kind of shivers at the word debt. However, when we talk about debt in the business world, we actually want to embrace this word, and we've got Tracy on the panel above. She's your expert here. Debt for your business can be absolutely fantastic, especially if you were in a short-term need, as an example. So you've got a fantastic customer that comes to you and says they want a huge order, but that suddenly requires you to go out and purchase something in order to keep this client happy. We need this pot of money and we need it fast. This is where we could maybe go and speak to the British Business Bank and say, right, how do we get a quick turnaround on a loan? We know our predictable repayment schedules. We know our planning time. We can retain the profits, because once I've worked out what I've got to pay back on that loan, it's not like I've got to give any percentage of my business away, which you would do for equity. And it isn't going to be as long a process potentially as a grant. So this can be a fantastic short-term need if it is there that you need it. And there's lots of providers and lenders that are out there that will be able to service you for a business loan. We must kind of stipulate that this is absolutely for growth and not survival. So if you're in a situation where you think I need to suddenly get a loan in order to survive the next month, that's not going to be something that that you may get through, but B, it's not going to be ideal either, because we know that by doing that, it's just putting you in a more and more dangerous situation and plan. So this can also improve your credit rating as well for your business, which really helps you, 5-10 years. So this is really going to help maybe with that financial future planning as well. Next slide, please. Equity. Right. Fab. So there always seems to be quite a few questions around equity and kind of what that huge word means. And again, please note down your questions for your expert here as well. Whenever we think of equity, I always think this is a much slower process. So if you are suddenly thinking, oh, I was thinking of getting some money, and you're already thinking of maybe Q1 2025, maybe equity isn't right. So if you're thinking maybe long term, this is where equity could be perfect for you. Now, the reason for this is with equity, and this is about giving away parts of your business, it is much longer process, because you need to be absolutely fully prepared, because it's essentially getting married to somebody. And they do say, when you try and get out of a relationship with an investor, it can be the similar process as divorce. And if anyone has ever been through that, you know that can be long and painful. So the reason we say it's longer is because ideally, if you're thinking of equity, we want you to be part of an investor-ready program or something that is an access to finance program. So if you are thinking of equity, let Tara know, because there are lots, especially within the West Midlands, there are lots of investor readiness programs, access to finance programs. They're all called something very, very similar. But the idea is that it's a program of education that you go through about equity, and they will help you understand what your pitch deck needs to look like, who you want as an investor. But absolutely, before you go down a conversation with somebody about giving away part of your business, please do some sort of educational free course. They are fully funded courses out there. So equity in regards to being scalable and clear strategy for growth. What I mean by that is investors, so people with money that want to give away, or investment firms or businesses, if you like to keep it simple, that are going to give away money. They like to see a couple of things within your business and you as an individual. Do you have some really cool technology in your product or business? So you might not be having any, you might not have any turnover or profit yet, but you might have some really cool technology that they can see absolute growth within. Do you have some great intellectual property within your business? So this could be, do you have an awesome trademark already, or an awesome patent, or anything that's intellectual property based? Because that is really, really fruitful for investors. Just a quick note on that. Before engaging in any conversation around investment, make sure you've got your intellectual property finalized. And this could just be the name of your business, the trademark of your business. And again, there are fully funded people like myself and fully funded programs that can help you even understand what intellectual property is. They can help you go through the process, but that is something that needs to be done before all of this equity comes into play. And I suppose, hopefully I'm not kind of teaching people to suck eggs on this, just to give you a bit of an example of that. So if somebody like myself was going to invest in you £10,000, don't have that, by the way, but if I was going to invest in you £10,000, I'd want to make sure at least your company name is protected, because for my protection, if in 10 years we're making 10 million and somebody else creates a business with that name, they can coexist. You can see the issues. We can never create a brand and use the logo of the yellow M, because we all know the yellow arch is a McDonald's. So it just gives investors that safety there. And that's why they will always want to make sure your intellectual property is sorted before they even engage in conversations. So coming back to coming back to the other scalable aspect is, so it might be that you aren't making any money yet, you aren't making any profit, that's fine, but it might be that you've got 50 to 100 members within your platform, within your product, or you've got a really large market, you've got a really good following. So what this investor can see is actually this person or this brand has got a really good following, they've got a really good concept here, and that can be really, really attractive to them as well. So don't necessarily worry if you're not ticking all of those boxes. It's just got to be something that's viable. If you've got a clear traction and clear strategy of where you want your growth to be, so whether that is through a visible business plan, they're going to want something back for their pounds. So it's always worth bearing in mind that. The benefits of being invested in, so for you guys as businesses, is absolutely the credibility and the reputation that it can give you within the market. So that's kind of direct and non-direct. So imagine that you are suddenly being seen on LinkedIn as you've had this investment. It creates this positive noise and positive kind of brand atmosphere. It can also really allow you to be introduced to some fantastic people. So whether that just be from mentors, through new connections, through industry leaders, by having an investor on board, it can open up lots of other doors that aren't specifically just about that kind of money as well. Now I'm going to go to the kind of the cons side. It does mean that you are giving away some of your business. So you need to be fully and emotionally prepared for that and okay with that, in order the fact that if I want to scale up, that is the option I'm going to go down, and that is what I am okay with. It can mean a degree, a loss of decision making, or it could mean even a certain level of loss of strategic direction, or it could be that my brand is going to potentially change in 5 to 10 years. And if your ethos is really, really strong about one particular ethical view, you need to be sure that the investor on board has that same view as you, because if in 5 to 10 years your brand adapts and changes and you go into new markets, you need to be okay with that, because the investor can do that if they want to drive that and have the ultimate invested power in doing that. And it's worth knowing, what does that investor want on what time scales? Will this pressure lead to you being stressed and compromise on any of these ethical values or strategic decisions? So there's a lot of things to consider, which is why we always say, anyone looking at equity, please do some form of program to really start to understand all of this in a lot more detail. Next slide, please. So crowdfunding. So again, please note down your questions for your expert on this. So it's the one area I think we don't really talk about as much as we probably should, especially when I kind of do these presentations. Somebody explained it to me that the once, and the easiest way to think about it is, if you are, say, on holiday and you're walking down the road and you've got a restaurant either side of the street, and one's really busy and one's empty, you'll always go to the busy one, which you probably won't get a table at, which doesn't really make sense. But you go to the busy one rather than the quiet one. And that's kind of the concept around crowdfunding, is if you've got a large community, or you're starting to develop that large community, other people want to really be involved. We always want to know what's going on there. Maybe I want a piece of this pie, as an example. And that's where you can kind of get your community or your followers or your members, you can really get them involved in your brand and your ethos, and get them to help you get from, I don't know, 10,000 to 20,000 pounds. This is the goal that we're setting. You do need to be really distinct with the goal that it is that you're going to try and get through crowdfunding. And obviously there's a huge risk of you not achieving that goal, and it can be quite public when you don't get to that goal. So that's worth knowing in advance. You tend to find the majority of businesses that do crowdfunding, say if we're going to crowdfund £10,000, an example, 60% of that £10,000 will already be ready to be chucked in. So actually you're only crowdfunding the 40%, because that 60% is us making that noise, you know, filling that restaurant. So it's easier to get the 40%. It can be absolutely fantastic for publicity and media attention and that brand awareness, because it really is a positive story. I'm sure you've all seen an element of it on social media at some point. Because you're using platforms for crowdfunding, there are some paid platforms, so watch out for the fees. And there are some free platforms. But again, watch out with your IP for this, because if you put your business idea and your goals and your crowdfunding, there's a risk that people go, that's doing well. They haven't protected their brand name. They haven't protected any of this from an intellectual property perspective. And then could that suddenly be stolen by somebody? So again, just speak to somebody and get that advice from somebody in an access to finance course. If this is the route that you are thinking, I've got 600 members, or I've got a really good following. It can be less than that, but this may be the route for me. Just get some advice first, just to make sure that your IP and your innovation and your ideas stay yours. Next slide, please. Oh, perfect. Thank you. So yeah, I think questions now, guys. You've got some amazing experts on this panel. And yeah, please just ask away. Get as much information out of this time as possible. But thank you all for listening.
Amazing. Thank you so much, Charlotte. And hello, welcome to the other newbies that have joined us whilst we've been enjoying Charlotte's presentation. Roxanne, can I just ask you to dip in here before we go out to questions? Just because I know you've got a few additional kind of lines of funding, alternative funding, that might be really useful to add into the mix.
Yes. Yeah, that was really good, Charlotte. Really, really great presentation. I've not seen that before. Yeah, so thank you. So yeah, we kind of the work that we do at Female Founder is for existing trading businesses. So not so much the startup loan facility that typically you would get through the British Business Bank and the CDFIs. We're kind of more in the space of existing businesses that are trading. It can be product or service based. UK, whole nationwide. We don't just focus in the Midlands region. We can cover the whole of the UK. So the kind of things that we would have seen a lot of at the moment is the kind of trade finance, asset finance and invoice finance space. So for example, if you're a product seller and you've got an e-commerce website, we can raise funding through that to help you pay to import and export your stock. A really great example of that is we have a lady that we fund with a trade finance facility. She originally went to the bank to ask for an overdraft. She didn't know that any other products or services were available to help her to cash flow the stock. So I went out to see her. The bank said no to the overdraft. Went through and explained a trade finance facility to her and how that would help her to grow the business. She'd never even heard of trade finance, didn't know that it existed. No one from the bank had pointed her in that direction of a working capital type facility. So her turnover went from 300k to 1.4 million in the space of 18 months because she had a facility that was fit for purpose. It allowed her the room to grow the business. It's a really fast turnaround service with working capital facilities. So as opposed to waiting maybe 4, 6, 12 weeks for a traditional bank loan, working capital facilities can be put in place much quicker. They don't generally need physical security. So don't need a charge over your house. Typically, if a PG is required, we can insure that PG, so there's no personal liability to yourself. Another example of where we can help with cash flow businesses for service-based businesses is with invoice finance. So if you're raising invoices and you have to wait 30, 60, 90 days to get paid by your customers, you can bridge that gap with an invoice finance facility as well. Again, that can be put in place in a matter of days and doesn't require any physical security.
Amazing.
that
Thank you so
helpful?
much. That's super helpful. Thank you. I know, obviously, so I've just popped in the chat. Anyone, if you want to ask any questions, please do put them in the chat or put your hand up and I'll come to you as well if you want to ask on camera. Obviously, when you registered, you were also able to ask some questions. So I pulled those together and kind of got out the key themes. Obviously, I know a lot of you just commented you just want to understand what's out there and the kind of the pitfalls and the possibilities with all of those things. So I'm hoping between Charlotte and Roxanne, they've kind of done that for you. But if you have got any specific questions, please let me know. A couple of people asked, and I guess Roxanne and Charlotte, if I come back to you guys, a couple of people have asked around, what's your main advice for financing, straight after bootstrapping? You've been doing the hard work. What kind of advice would you give to people? And this linked into a couple of people also asked, there's that chicken and egg situation, isn't there? You're kind of not lendable or investable, so is a personal loan the only way to go? What advice would you guys give when you're speaking to female founders, straight out of bootstrapping?
You want to go, Charlotte?
Yeah, it's interesting because I was having this conversation yesterday with about 40 female founders, and for me, it always comes down to that question first. And I say, if I was to just put a lump of cash in front of you on that table, what would you spend it on? And sometimes they go, oh, I'm not sure, because I think the idea of having money and the idea of our next finance step is sometimes just more of an idea than a necessity. So I always kind of say, let's be really clear about what is it you need to spend money on. And we could all spend money on. I could spend money till the cows come home. But actually, is it something that is needed right now? Is it, I absolutely need this printer, this machine in order to get to that next stage, and that is going to cost me £10,000? Or is it just, well, I'd like more money in the business to do this and to do this and to grow, but that's quite generic. So it's always about that why for me, and actually how much is that exact figure? Because we could all do with different pots of money, but actually what do I need right now and what for? And then let's figure out how we get it. But if we're trying to figure out how we get it before we spend it, it's almost the wrong way. So I always say, how much do you need? And if you actually need it, you should have that exact figure. So I need £12,000, £12,500 because of this. Perfect. Now let's figure out how we get you that. But if it's just about, I'd love more finance, I'd love more money, it might be that actually you don't necessarily need it at this stage. You might need some sales support, some business development support. Let's go out and get you loads more customers to actually, they can increase the profit, they can increase your turnover. Or let's look at your costs and just reduce all of those by 1%, which therefore then makes your profit percent bigger. So it might not need that you need money chucking into the business unless you know exactly what that is to spend on, if it's a new sofa or I don't know, something that's really specific. So that's kind of where I tend to come back to first. And then I make people go away and really think about that and almost make a bit of a wish list with some figures around, and then we can start to highlight those priorities and really start thinking about the urgency, I suppose.
Yeah, I 100% agree. So all of the clients that come to us asking for a facility, they have a project in mind, so they know what they need the money for already. So we've got a lady in London that we're working with. She needs 75k to build an AI product for her website to help with efficiency and make the customer journey better, but she's already costed it out. She knows how much she can afford to spend. She knows what the money's for, so she's not afraid to borrow the money and spend some interest because the return is far greater. So yeah, exactly right. Yeah, it's really, really important to know what you want to borrow the money for sure.
I think there's sometimes a misconception of money is going to get me more customers and more sales, but actually the money can just sit there. It will be yourself and your sales plan and your marketing plan and all of that will go out and get you more customers and more sales. So I think there's just sometimes a bit of a misconfusion with that.
Yeah. That's really, really useful. And I think, obviously, Charlotte, we talk about in the West Midlands, we've got people like you who are there and fully funded. Tracy, what role does British Business Bank play when we look at the kind of UK wide, in terms of, Charlotte makes a really good point around working out what money you need and what you need it for, but actually who do we then go to? Who, like, if we don't have a Charlotte on our doorstep, who are we asking that question? Because I think that's where lots of people on this call probably sit thinking, oh yeah, I can work out how much I need and what for, probably, but like, then who do I go to ask for advice?
Yeah, and it's a very good question, Tara. So the British Business Bank operates across the whole of the UK. We do have some regional funds. Again, they also cover the majority of the UK. So if you're looking for equity, or you're looking for a loan, or actually you don't know what kind of finance that you're looking for, if you go onto the British Business Bank website, there is a finance hub that you can access that will have all that information on. And it also has all of the bank's partners across the UK as well. If you perhaps want to, deal with a finance house that is in your area, so say for the West Midlands, you can filter by that as well. So you can actually pick somebody that is perhaps on patch, they know the area, they might even know your business already. So there's all that kind of thing that you can do on there as well. But it's a good place to start because it does have a lot of information and case studies around businesses that the bank supported.
And is all of that free to access as well?
It is indeed. It's all free of charge to access. This week and next week, we've actually got Business Finance Week events that are happening all across the UK. Some of those will be face-to-face events. Some of them are online. They as well are free to join and free to attend. And they'll be perhaps localised. So for West Midlands, I've put the link into the chat already, but we've got a female founders event next week in Birmingham. And that really is to look at female founders and how they access that funding that they need. But yeah, it's all free of charge. There's loads of booklets on there as well that you can download free of charge. I mean, yeah, it's all here really to help that business make the decision that will help them to grow and scale. And to employ perhaps more people.
Amazing. And Alexandra, I want to come to you about angel investment, because I think, from a lot of work I've done with female founders in this space, I think angel investment in particular is a real buzz term at the minute, and it's really trending, and everyone thinks they need angel investment. But one of the things that I'm always conscious of saying to people is that really does change the nature of your business, doesn't it? Even the greatest impact investors are still going to want, 3, 5, 10x a return. From your side, how, if someone comes to you, so I've got a great business idea, I'm generating some revenue, I come to you for angel investment, what does that look like? What are the next steps? And actually, what kind of advice do you give to people? Where do they need to be at in their business and their growth journey?
Thanks, Tara. So I guess maybe just to demystify that process, we are quite happy to review applications from both pre-revenue and revenue generating businesses. So businesses that are making money and businesses that aren't making any money just yet. What we've done is we've put in place an evaluation criteria. So there's a matrix that we use to do an initial evaluation on all applications. So since I joined, one of my tasks was to put process in place for that, so that we can look at every single application that gets into Minerva. So we look at every single application. We have an evaluation matrix in place. There are common criteria that cut across both revenue generating businesses and pre-revenue businesses. So if you're looking to raise investment, some of the things we want to know is stuff like, give us your customer analysis, market analysis, competitor analysis. Even more important are things like product development strategy, growth strategy, and client acquisition strategy. Those three we lump together somewhat because, as Charlotte alluded to earlier, equity investment is really there to help a business grow and scale, obviously depending on at what stage you are, but that is important. And product development strategy, growth strategy, and client acquisition strategy really talk to that growth aspect. So if you're looking to enter new markets, is it with the same product or with the same and new products? If you're looking to enter new markets, those are different customers. So how does your client acquisition strategy change? Because you're going to be selling different products to new markets. So you can't just go in with a one-size-fits-all approach. So we look at things like that. And then obviously, investors want a return. So is there an exit in place? And that could be, we want to raise Series A from a VC. So angels will then see an exit there. If you're looking at pre-revenue businesses, there's some additional criteria that we take into account. So we look at things like MVPs, so minimum viable product. Have you done any beta testing, or do you have any pilots on the go, or pilots that are soon to launch? Is there any IP in the business? Have you raised previously? Do you have advisors or a board in place? And again, the word credibility was mentioned earlier, but you don't necessarily have to have had previous investment to be credible. You can achieve that through other ways. So I'm sure that a lot of people on this call, when they hear investment, the word traction kind of gets thrown around, but traction can mean various different things. It could mean, revenue generating traction. It could also mean user engagement traction. So, not the number of downloads for your app, for example, but the number of users that are actually, using that. So even if you're not generating revenue, if you can show us that, X number of users are using your product or service, on a weekly, monthly, annual basis, that's traction. And then what we do is we score the application. And if the application hits a minimum score, it then gets shortlisted, and those shortlisted applications get sent to a panel. And that panel, again, a bit all over the show here, but Minerva is part of the University of Warwick Science Park, which is in turn wholly owned by the University of Warwick. So that panel that reviews the initial evaluation is made up of academics and professional service staff from within the university. So there's two reviews that get done on each application. And if after those two reviews, decisions are confirmed, then we may invite the business to pitch to our angels. So by the time it gets put in front of our angel investors, it would have gone through some kind of, credible evaluation process, which is far less subjective than it previously has been. So that's the process that we follow. I don't know if that provides any bit of clarity, but I'm happy to answer questions around criteria or amounts and whatever the case may be. But I don't know if that paints a clear enough picture.
Yeah, I think that's super, super helpful. And I think obviously, you've got a group of angels that are part of your network. A lot of people in their questions kind of ask, where do you find the angels? Like where are these magic angels coming from? Obviously, you've got groups like Minerva that make it easier because you have a network of angels that are already there that follow your process. If someone was just, sitting in their kitchen table trying to work out how on earth do I find angels, or I'm not within Minerva's geographical location, if you guys work in kind of geographical locations, like what's your advice to people for identifying and finding angels in the first place?
So angels are usually part of angel networks. So if you literally just Google angel networks, in whatever region you may be, it's likely that you'll find something. So you've got Essex angels, you've got Henley business angels, you've got Minerva business angels, you've got Lincolnshire business angels, you've got angels down in the southeast. So there are networks or syndicates of angel investors. While we support businesses that are based primarily in the Midlands, we do look at applications from businesses that sit outside of the Midlands. I was on a call this morning with someone who's got an affiliation with Dorset Angels. Next week I've got a call with somebody who is affiliated with Essex Angels. So it's not like what we're trying to do is be a bit more collaborative as angel networks too. Yes, we want to, as angel network, we want to be successful in terms of investments and exits and all that kind of thing. But I guess, if we can share and refer between networks, that's great. But it's literally, just Google. I know that sounds, quite straightforward, but that's what it is. Google wherever you are, the region there, and if there's no network in that region, it's likely that it'll be possibly kind of, next door. But you can apply to any of them and let them tell you, no, this is, a better fit for this syndicate or this angel network. And what happens is members of Minerva Business Angel Network are members of other syndicates, investor groups, and angel networks too. So, it's not like they're just married to one angel network. They belong to many. And that's because they realize that, businesses would only apply to one and they might not see all the great opportunities that exist out there. I guess to answer another part of that question is, how do we find angels? It's in the exact same way. So we will talk to financial institutions, with that wealth managers. I mean, I did the call last week with the Institute of Chartered Accountants. So, even accounting practices, wealth managers, banks, and we say to them, look, we're Minerva. We're looking for high net worth individuals or sophisticated investors to join our network. This is what we have to offer. These are our statistics in terms of applications received, sectors that the business are applying for, investment sought, all that kind of thing. We're able to provide now that we have, some good processes in place. But it's us going out to try and find these investors too. If they're not, they're not banging down our doors to join our network. We have to go and find them. Yeah, I don't know if, again, hopefully that answers your question.
Yeah, brilliant. And Roxanne?
Yes, I was just going to say, I believe that there's something called, well, I know there is the Investing Women Hub website, and I believe as far as that, there is a whole raft of angel investors that you're available to contact on that hub. That is a free service as well. So I think if you type in what sector you're looking for and what region, that it will narrow down the angel investors in your area that you can then have direct contact with to see if they're happy to support your business.
Yeah, great tip. I think a couple of people did ask, where do we find this spreadsheet of magic angels? And I think it's really important for people to understand it doesn't really work that way. There are brilliant things like Invest in Women Hub, but actually you do have to go out and do your own research. Like, that's the reality of this, because angel investors, be them kind of independent on their own or part of a syndicate, part of a network, they are looking for totally different things. And actually, they might have invested in something that sounds just like yours, but actually they want to diversify what they invest in. So, LinkedIn, and it sounds a bit typical, but LinkedIn, I think, is a really great place to start. And I think often people say, oh, and this is definitely something you hear a lot in the female founder space, typically men can just go out to their network and to their family and to this and that and ask for 20, 50, £100,000. I don't really have that network. But I think you'll still be surprised in who's within your network, and asking people for recommendations and referrals. And I also think asking people, if you can find someone who has worked with an angel or a VC before, go and ask that founder what it's been like working with them. You equally, I think people often forget how much of a two-way relationship this investment has to be, and it's so important that you get the right fit. And Charlotte's kind of your end, it's not just free money being thrown on the table. You have to think about things like exit plans and what X are you going to grow to give them that return. And I think there is a lot of two-way in that, and so you have to find the right fit. I think a lot of time you've got to go with your gut instinct as well, and I think that's really, really important. Charlotte?
Yeah, I was just wondering, because I get asked this a lot, and I didn't know whether Alexander could almost just demystify. So when we talk about equity, we talk about angels and venture capital, the different types of investors, because I think the females that I speak to, they go, okay, so do I have to go and speak to a large corporate firm? Do I speak to an individual or, the neighbor? Like, what are those real differences in equity companies and people, and maybe some of the pros and cons of those?
Yeah, sure. Good question, Charlotte. So I guess if you look at the investment journey that a business could go through, so early startup business, early stage, that's typically where angels would invest. High risk, they're looking for high return. There are some great tax incentives for early stage investment as well. So just a tip is that if you're looking to raise investment from angel investors, have a look at the enterprise investment scheme and seed enterprise investment scheme tax incentives. If your business can be approved for that, it becomes a lot more of an attractive, well, that's probably the wrong word, but it goes a long way when you're pitching to angels, because it's a loss, it's a risk relief, tax relief system that is available. So early stage startup angel investors. There are some venture capitalists that invest early stage as well, but typically it's your angel investors. So that's what we refer to as early stage, pre-seed to seed. So if you're looking for some terminology, that's where angel investors play. But like I said, you do get some venture capitalists that'll also invest at that stage of a business. After angel investment, that's when you move into seed to Series A, Series B, Series C. So this is where, again, maybe some terminology you might have come across. So this is your growth scale phases. So seed and up is venture capital. Those could be private venture capital firms, so the likes of Mercia, who's in the Midlands, for example. They could also be venture capital funds. So that's where you're looking at VCs. But that being said, you do have very wealthy angel investors who invest at that stage too. So they angels don't only invest early stage. They may come in as part of that seed to Series A, Series B round, as it were. And then if you're looking at kind of exit, so exit means you exiting your business, you selling it. Somebody wants to buy it. That's either through a management buyout or through a merger acquisition, and that could be a corporate. So I don't know, Barclays Bank, you've got a great fintech solution. They believe it'll help them better service their client base or improve their operations and the way they do business. So they'll buy your business. There's also private equity. I'm not going to go into too much detail around further steps down the line. But angel investors are typically early stage. And there, again, just to use some terminology so that it's not going to be foreign to you. When they say they cut a check, so the check sizes, angel investors can be a couple of £1,000, all the way up to a couple of £100,000, and depending on which angels you have in the network, that could be a couple of £1,000,000 that they may write a check for. As part and parcel of that, there's something around valuations, so how much your business is worth. So that is, again, something that you would need to understand and look into if you're looking to raise equity investment. And yeah, the two are linked, because bearing in mind when angels invest, I know there was a slide or a question, 2 questions in the chat around do they take equity, and we're not ready to give equity away. Yeah, that's what they do. Angel investors, VCs, they give you money for you, and they want a pound of flesh in return, because if they have that pound of flesh when the business gets sold, that's where they make their money. But that's all negotiable, and that's all determined by your business's pre-money valuation and all that kind of thing. So there is a lot in there, but I think the more conversations you have, as Roxanne, Charlotte alluded to, the more you'll understand. The more conversations you have with founders who've raised, with angel investors that you may have access to, the more you'll start to understand what that space is all about. It's not a scary space. It's just very challenging. Because if I just look at some of the stats from our side, and I'm just putting something together for a report now, internal report, and I'll just call up the spreadsheet very quickly just to give you an idea. And this is just Minerva. So for a 6-month period, we've received around 160 applications. That's about a 5-month period. 160 applications in total, of which only 70 have been shortlisted. And of those 70, only 30 have been invited to actually pitch for investment. That doesn't even talk about how many of those companies that have pitched secure investment. That goes down into the single-digit percentages. So it is challenging, but I don't want it to appear to be scary. There's a lot of support out there. We're quite happy to have a conversation with you, Tara. I'm more than happy to have another session purely on angel investment, where hopefully I can give more detail around the criteria, what we look for, what does client acquisition strategy mean, what does growth strategy mean, what does beta testing mean. I'm happy to do that, because I think the more we can share, the better. But sorry, I know I'm talking a lot here. But Charlotte also made a very good point, is what do you need the money for? And is what you're going for the right finance that you're looking for? That's very important.
That's brilliant.
Sorry, I spoke a lot
super helpful. No, that was great. And that's a perfect segue, because I really want to get your experiences as a founder. What made you go down the crowdfunding route? Is it because you didn't want to give your founder flesh? Is it because you just decided that wasn't for you? Like, I would love to get your insight into the decision-making process, but then also how you found, being on Kickstarter and really using social media to leverage that community and get that excitement going.
Yeah, of course. So I started I create my idea, my concept of my product in 2022, and I thought, I really wanted to kind of get funding and bring in like investors on board from the start. I just sort of knew that was the business I wanted to build. But for anyone who's here who has a consumer product, it's actually super hard to get investors in such an early stage. They actually want more like traction in the market. They want you to already launch the product, really have things. It's very different to tech. So it's a very different expectation that they require from you. So I spent the year basically trying to find investors, and it wasn't working. And I had to kind of pivot, and I, thought about Kickstarter. I saw a lot of consumer brands go down that route that really wanted to kind of shout about their brands, as well as get their early consumers in from the get-go, which is great, because I was pre-product, so I've not launched my product yet, so it's still literally, it's not even gone to manufacturing, so that's literally where I am. And yeah, I chose Kickstarter. There's a few other crowdfunding places you can choose, but do your research. I did Kickstarter. And also, I would say Kickstarter is a tricky one, because if you don't actually raise the amount or target you're wanting to do, you don't actually get the funding. So it's all or nothing. So you have to mentally be prepared to be basically making sure you hit your goal. So I would make sure you mentally okay to do that, because it is a lot of work. It's I'm on social media like almost every day, and people are like, oh my God, you're doing amazing, but it's a lot of work. I'm just letting you guys know, because it's mentally challenging, and also you do so much as a founder, when especially because I'm the only person in my team, so it's just me on my own. So you have to kind of really also like pivot as you go. Like, there's plans I made a few months ago for my Kickstarter, they've had to kind of change, and I've had to just redirect a lot of things. So it's a lot of planning. So I had to start planning some from January. So I've been planning for months, and I only launched it at the start of September. So it wasn't something I just thought about in like a month or 2 months. It actually took a lot of prep work. to kind of actually bring my consumers or my target consumers to the platform, because at the end of the day, Kickstarter is just the home base that you're meant to bring people on there. They don't actually help you get customers in there, just for if anyone doesn't know that. So yeah.
Amazing. And obviously we should say, but you're currently what, 129% funded?
Yes, 130%.
And you still got 12 days to go. That's amazing. And it isn't easy. It isn't. And I think, loads of people will resonate with that. When you are the only person doing it and having to make it all happen. So that is absolutely phenomenal.
Thank you so much. Thank you.
And what kind of business support and help and advice have you had, or have you kind of, stumbled your own way through it, or what's been really useful to you in terms of, because you say, you went for that investment, it was really difficult, it wasn't there, so you pivoted. But that's not easy to do, is it? When you're in the midst of it as well.
Yeah, I did get loads of support. I've been to so many accelerators. I would say as a founder, you do quite a lot, and you meet people as well. So I really enjoyed that element. I've met a lot of people along the way who've supported me in various ways. That not just financially, but like just any resources they know of, and we just share. I've also just recently won a grant from my local council, which is going to be match funded, to help me get my product into SPF testing. So I've also gotten a lot of support from like community and council grants, or like any like resources there. I would say that's mostly where my support has really been, and just speaking to like other founders on LinkedIn. I would say LinkedIn has been my major go-to place since my crowdfunding launch, and I actually didn't think it would be. I didn't think I was going to get such an amazing response from that, LinkedIn, and it's been pretty amazing how many people I've been able to connect with since I launched my crowdfunding on there.
Brilliant. Amazing. Yeah, that's fantastic. Roxanne, I just wanted to come back to you as well. In terms of the founders who come to you and come to your platform, what kind of support are they looking for? And, what isn't out there, what isn't obvious for female founders at the moment that you're trying to plug that gap?
Yeah, I'd say at the minute, probably 80% of what we're coming across is working capital facilities. So like I said earlier, typically nearly all of the ladies have bootstrapped, sort of self-funded personal credit cards, borrowed from friends and family to get to the point that they've got to, which was brilliant. But then typically they go to the bank to ask for an overdraft, because why wouldn't you go to the bank that's supposed to be there to support your business? More often than not, they've said no for whatever reason, whether it's they've not been trading long enough, they don't think the founders have got enough experience, lots and lots of different reasons. But then actually, once you sit down and get into the nitty gritty of the business and what they're trying to achieve, and like Charlotte said, what they actually want the money for, a bank loan or an overdraft maybe isn't the most appropriate facility for them. They need something that offers them a lot more flexibility, so the ability to dip in and out if they're having a more expensive month, and then say the next month they can repay a majority of that and then reborrow again. So it's the revolving working capital facilities that we're coming across the most at the moment.
Right, that's really useful to know. And I've seen obviously in the chat, Rita, Wendy, you both are kind of hooked up with Tracy and Charlotte in terms of CICs. But Charlotte and Tracy, is there anything that you guys can add kind of generally about CICs and the difference that makes when it comes to accessing funding or support? Anything, because I think there are quite a few people on the call and will be watching the recording as well who are running or about to set up a CIC. So anything you can give would be really helpful.
Yeah, so a couple of things from our perspective. If you're a trading CIC, or let me rephrase that, if you're looking for finance, anything other than a grant to support the growth of your CIC, they will be looking at the turnover of the business and if the business can afford to make those payments repayable on the loan or whatever it is that you do. Also, in the articles of association for a CIC, it will actually clarify whether the company, the CIC can borrow or not. So that's also something to keep an eye on when you're actually setting it up on a company's house, etc. Because that is something that any lender would potentially ask to see. I think the other thing that we haven't touched on, perhaps for an earlier stage CIC or earlier stage businesses in general, actually, we've touched on the angel side of things, but actually you've also got startup loans that a business can tap into, and that is for your really early stage businesses or even pre-trading, and they will look at finance of up to 25,000 per director, maximum of 4 directors. It is a personal loan, so you will remain liable for it, but it is for business use, and it is fixed at 6% for the term of the loan. So there are different avenues that you can go to, but specifically around CICs, I would, just make sure that your articles of association reflect that. There are some specialist lenders out there as well that will look specifically at CICs. You've got, for example, the Charity Bank. There's a number of different banks out there that will focus on both charity and CIC companies. Again, though, they might want to see some trading history to make sure that the CIC can repay the finance that they're borrowing. Charlotte, I don't know if it's a little bit different with grants.
Yeah, so you tend to find that CICs are eligible for grants. Charities don't tend to be, but CICs are absolutely fine. So you can apply for the grants. You will need the finance there to apply for that grant, because you still need that match element. We try and work with CICs and go back a couple of stages. So we try and almost have you or help you set up your business model so you aren't 90% relying on grant funding or lottery funding. The idea is that we can have you as a 50-50% model. The 50% of your revenue is coming from, grant funding, lottery funding, all that type of stuff. And then the other 50% of the CIC is coming from private revenue. So is there any, merchandise you can sell? If you're a mental well-being CIC, for example, how do we help sell those services into private firms? And we're trying to help you with that sales element. So it's about generating your own revenue, so you don't have to keep applying for that money to kind of keep you afloat. You ideally just want to be using 2 different revenue streams. So that's kind of the other side of how we can help with the finance without actually giving you finance.
Brilliant. And Alexander, did you have something else you wanted to add?
Yeah, thanks, Tara. I just wanted to also just add two the things. So what I didn't mention around angel investment is that it's not just a financial investment. If that decision is made, there's value beyond the finance that gets committed. So these are usually exited founders or ex-C-suite executives or professionals. So you get that added value beyond the financial kind of support. But I just wanted to ask, and one of the conversations I was having earlier this morning is around early stage businesses, startups, SMEs, and having a fractional CFO in place. So someone who really has knowledge of the numbers, because I know I ran a business for 10 years in South Africa, and for the first 3 years, I had no clue. I was just kind of plugging things into Excel and then trying to understand it myself. But as soon as I got, a CA to help me, once every 2 months, just understand how to be managing this a lot better, it really helped me. It's just something for the businesses on this call to think about is actually having that fractional CFO or part-time accountant just to really break the numbers down for you and also to forecast for you could again just help with applications for grant funding or debt or angel investment. Just something to consider.
Yeah, that's really, really useful. One of the things Charlotte talked about right at the beginning around investment readiness programs and access to finance programs. That's a huge part of what they help you do as well. And looking at that financial forecasting, looking at, the kind of capital gap and what kind of funding you need. Good news is one of the things we're looking at 51% Club is to run an investment readiness program free investor readiness program online as well, so that people who don't have it in their regions can access. So yes, all of you guys who have registered for the call get information about that as it happens as well. If anyone's got any other questions, feel free to put them in the chat. Otherwise, I guess if I could just ask our experts for one kind of final, I guess, wrap up thing, you know, what's the one thing you would want people to take away from today? Be that a specific piece of advice, be that a specific resource, something that's going to help these brilliant female founders kind of take the next step in terms of funding and finance. Tracy, we'll go to you first.
Thanks, Tara. Yeah, I think for me, it would be explore all your options that are available. And you also don't have to stick to one. It's not about you either have a loan or you have a grant or you have angel investment. Actually, you can blend all these together. And it might be that you look at doing part of a loan and perhaps part equity, so you don't lose that dilution. So yeah, definitely explore all the options that are open to you. You can do that on the British Business Bank website. As I say, there's lots of information on there. But yeah, just do your homework, I suppose, is what I'm saying.
Yeah, great. I love that one. Fantastic. Roxanne?
Sorry, my mouse wouldn't work. Yeah, I would say, yeah, absolutely do your homework. You don't know what you don't know, so ask for help, reach out. I'm sure that any of us on the panel would be more than happy to have a conversation, or try and, if it's not an area of expertise that we've got, to pinpoint you or signpost you to somebody that we know would be able to help. Ask for help, reach out. There was some stats in the Investing Women Code report that came out last week that said warm referrals are much more successful at getting funding than cold referrals. So if you don't know, if the referral comes from somebody that already has that connection, it's much more likely to be successful. So collaboration and ask for help.
Yeah, great advice. Enye, from your side as a founder.
I would say in terms of like crowdfunding, I would say it's just not only about raising the funding. I really truly built a community on LinkedIn with and also like my future customers. So I would say really engage with like a clear vision, story, and also like updates on what you're doing and, you know, where you see your brand going. And I think that's the key thing that's really helped me get to this point and really like grow my crowdfunding like journey. But yeah, that's it from me.
Fabulous. Charlotte?
Yeah, really similar. I think to some of the others, it's about using your kind of your tribe. So if that is this group or another network, and just seeking the support that is out there before you do anything. So tap into all of the fully funded support and networks and programs that are out there before you make any decisions, because it may be that the decision that you thought you were going to do may be completely different, but there is so much support out there for female founders. It may not seem that way, because until you get into these little pockets, that it does feel really vast, but actually there is the likes of, like, you know, Tara, the Creating the 51% Club, hopefully should open the kind of horizon for you to get that support you need. So yeah, it's just kind of use your tribe and just get that support, I think, for me.
Amazing. And Alexander?
I think Charlotte's reading my mind there. Absolutely. You know, your network is often your strongest weapon when you're starting out. And you don't be you know, too sort of faint-hearted in trying to take advantage of whatever resources you can access through that network. Often you can get things done for free that you thought you would need money for, simply by returning a favor. But importantly, you know, whatever it is that you're doing, don't lose sight that you're still running a business on a daily basis, because we could get caught up. I mean, Enya said that, you know, she was so hell-bent on raising VC funding that, you know, it took her a year to realize that it's not for her, and just pivoted to crowdfunding. So don't lose sight on what you're actually supposed to be doing on a daily basis. But yeah, use your network as best as you can.
Brilliant. Thank you so much, guys. It's been absolutely brilliant. I will make sure that everyone that registered for the call gets a link to all of the experts on LinkedIn as well, so you guys can connect. I know we have not even gone into today gender equality, unconscious bias, how it feels to be a woman in the room with loads of men, why there aren't enough female angel investors and VCs. I could talk about that forever and ever, amen. And we've got loads of events coming up where we can go through those things. But I just wanted today to be an initial kind of informative, educational piece for you guys to understand a little bit more what's out there and start some great conversations. And hopefully now everyone that's joined this call, you will all connect with one another as well and start to share your experiences and ideas. Please, I say, join the 51% Club. We've got a Slack, we've got a WhatsApp, we've got tons of things going on. And that is what this is all about. It's about coming together, right? And I could talk about the gender equality piece forever. So if anyone wants to slide into my DMs, come over and I will talk about that. But thank you so much, everybody, and a huge thank you to the experts. I know you guys are extremely busy, so I really, really appreciate your time. Everyone, go forth, have a wonderful day. Female founders, I'm always so proud of you. Keep smashing it. We can smash the patriarchy all day, every day, and lean on your network, find your tribe, because there is power in the community. So yeah, thank you everyone and have a brilliant afternoon. See you later.
Thank you, Tara.